Because of Vinny coming to you on the 27th of April with a market read and a watch list. This is just a reminder to remember we have lives aside from day trading. Though it is changing from winter to spring, it's time to remember that things do change and we need to be aware of it. With respect to the markets, we are in a period where trends have changed. We've since moved off the highs in March on this chart of the Nasdaq Composite and have been steadily moving lower, testing the 20 period in this case and almost testing the 50 period on Wednesday this week and a 50% retracement. I thought that's a possibility we could get up to 6.8, but that didn't come into play, and it tested the 50 period moving average. The point is that when we look at these charts, we need to accept when things have changed and change our trading accordingly. Looking at the time spent down below the zero line on this present B indicator down below, we can see that this is the largest amount of time that we spent down below this level in the entire year. This is the same chart with an Ichimoku indicator set up enabled. We can see that we came right up to the bottom of Senkou span B and was rejected there as well. I was talking to Mikey over the weekend that I should have heeded this signal that I did point out on Tuesday, but I traded Wednesday, Thursday, Friday with a long mindset and I got stopped out of everything that I took. I tried to take NVIDIA twice and got stopped twice on that particular name. So I'm acknowledging that the markets have changed and I will be trading accordingly going into the summer months. This is a chart of the industrials. We can see RSI is turning back down and we're having difficulty with this level that we've tested several times in the 16,588 level with the Dow Industrials. This is a chart of the New York Stock Exchange Composite Index, 1,867 stocks that have a pretty broad market, small caps, mid caps, and large caps. And we can see that we've put in a lower high as well. The New York high-low indicator has hit the 20 period and is flattening out, and MACD is turning over. The Russell 2000 small caps have fared somewhat worse. We retested the extension of this trend line and are rejected here, and I would expect these prices to come back down and at least test this low that we put in back in February. Also note the RSI got rejected at 50 and slow stow is turning down as well as MACD. So all indicators are that the Russell 2000 and the IWM will be weak again this week. The S&P 500 weekly chart, I pointed this out during the week that these vertical lines are the month of May in each case. We can see that the CCI indicator has flattened out and it may turn back down more than likely, as we saw a somewhat of a long-legged doji here last week. Looking at bonds for a moment, this is the 10-year yield. We've been talking about this for some time. We thought that this might get up to the 50% retracement. That wasn't the case. It hit 382 and got rejected at the extension of this trend line. We'll be watching this coming into Monday, Tuesday to see where we're going in that respect. I did sweep some long funds in my 401k into bonds. The Vanguard fund that I am in, VBTIX, has AGG as its benchmark, the Barclays Aggregate Bond Fund, and we're flagging out here at these highs at the 108.50 level. Have yet to break out, but we've been pointing out for some time that we had a cup and handle with a smaller cup and handle inside. I'm looking for seasonality to pick up during the summer months where bonds tend to outperform equities. looking at a chart of TLT, which we've been trading in and out of since the December-January period. We're above this Kirby level, which really tapers off to the upside, and we just see prices continuing to meander between the 10-period EMA and the upper Bollinger Bands. This is something I pointed out on Friday with TLT weekly. We can see prices are just about to emerge above this Kirby level, this huge level here. And note the CCI indicator above, and note the periods shaded here vertically are the summer months in each case since 2010, where we had the flash crash here on May the 6th, I believe, where we saw a 1,000-point swing in the averages. Intraday, the fact that CCI had been strengthening during the summer months, leading into the summer months, in all of these cases except for this most recent run in 2013, where TLT didn't perform as well. So now we have the same situation where CCI is strengthening again, and bonds have bottomed in this nice base pattern here and broken out of this Bollinger Band squeeze right in this level here. Now we're just continuing to meander again on the weekly, with the 10-period moving higher and bond prices continuing to move in an upward fashion on TLT, the 20-year. And as Yukarowitz pointed out over the weekend, this is the lowest exposure over the past 10 years fund managers have had to bonds. The most exposure they've had to equities in some time as well. So there should be something of a shakeout in the coming months, a continuation of what we've already seen on the averages, in my estimation. Doesn't mean that's what's going to happen, but that's what I'm anticipating. So I've changed my exposure, bond exposure, and less on the equity side during the summer months. This is a chart of the Deutsche Bank Currency Harvest Fund, DBV, a reflection of the carry trade, and something that I watch to keep an eye on the markets as well. The thesis is that when the currency yield, when the carry trade is moving higher, that's bullish for equities, and when it's moving lower, it's bearish for equities. Well, we had this flag that we were putting in at these levels of resistance that I've been pointing out over the last couple of weeks, which broke down and currently is setting up a box trade. So the mindset is that we could continue to see lower prices on the DBV and retest this downward trend line. This is a daily chart. If we look at the weekly, we can see this resistance level a little bit more clearly, and the fact that we could be putting in a head and shoulders top on the carry trade. MACD is starting to turn, and slow stow has already made its move and give us a sell signal. So let's take a look at some stock scans. We're going to run a Bollinger Band scan. We have 17 stocks that show up on the list, ranking them by sector. We can see utilities are starting to make up a bigger portion of the scan list. So the thesis is that when we start to see large numbers of stocks showing up, we start to look at those sectors. And utilities have been in play if you've been paying attention to the sector performance that we usually post on a daily basis. Click the bar chart, double left click here, and let's set it to 2. We can see very readily that the S&P sector performance has been mostly in utilities, so we'd be focusing more in that area if we want to do just longs in the utility and defensive sectors, consumer staples, which you can see is both of these have outperformed over the last 2 days. If we look at the last 5 days, we can see a little bit of the same thing with a little bit of performance on the finis, but mostly in utilities and consumer staples. A little bit in energy. There are still stocks that are continuing to perform there going into this week. So let's take a look at some of these utility names. Dominion Resources is a name we've traded in the past, and we can see that we're breaking above a pattern with Bollinger Bands expanding, volume mostly buying when the indices, S&P 500, etc., were moving lower. This was moving higher off of Wednesday. And we have a MACD cross, and RSI continues to move higher. Stochastics doesn't look half bad as well. American Waterworks continues to march higher. Prices are approaching the top of a Kirby level. Keltner channels are continuing to cruise higher, and only on Wednesday did we see lower prices when the S&P 500 was down Wednesday, Thursday, Friday. We were up Thursday, Friday on American Waterworks. MACD could turn, not the best chart, but it does have a pretty strong scooter score down here at the bottom at 73.6. Great Plains Energy has been on the scan many times before. You can see a nice ascending triangle pattern above a Kirby. Bollinger Bands are tight, above average volume, and MACD is turning along with stochastics leading the way. RSI looks pretty decent as well, and we have a nice scooter score of 82.6. Portland Electric, another of these utility names, doing quite well. Ascending triangle pattern, breakout. Bollinger Bands are both bottom and top are cruising higher. I would watch this lower one to see if it does in fact move lower, which would indicate that we're going to have a faster move higher. Above average volume, MACD crossing, and a nice scooter score, 83. Ppl Corp, another one of those names in the electric space, grinding along the top of a Bollinger Band, and we see nice volume on the days again that the S&P was down, the NASDAQ, etc. This was rallying, as well as the sector being pretty much doing quite well. MACD is in a serpentine pattern here. We'd like to see it cross to the upside. Stochastics is already leading the way. Not the best one in utilities, but another name to keep an eye on that showed up on the scan. Sempra Energy, SRE, this one's been on the scan before. Above average volume, breaking above a pattern. Keltner channel continued to move higher, and we are above a Kirby. MACD cross, stochastic cross, and a decent scooter score, 74.5. I'd be checking the earnings on all of these, by the way, if you're going to consider taking a trade. UGI Corp, a holding company in the gas distribution sector, above a Kirby level, and just continues to cruise higher. I would imagine a lot of these names are doing well because of the Ukraine issues. MACD cross, stochastics is overbought. This could turn down a little bit, but keep an eye on it nonetheless. 80.2 on the scooter score. Let's take a look at the utility sector, which I have all the components of. See how this group is doing. AES, GAS, doing quite well. AEE's been on the list before. Bounce off the 20-period moving average again. Relative strength. MACD cross. AEP, breakout. This is what I'm expecting a lot of these to do this week. MACD turning higher on higher volume. Again, check the EPS dates. CNP, Centerpoint, CMS. You can see all of these names are doing quite well. Relative strength. Con Edison, big cup and handle. Nice pattern here. Breakout on Dominion, we pointed out previously. Those were markups from previous trades. DTE Energy, Zoom Zoom. A lot of these names just look great. Duke Energy, we've traded this one before. Nice flag and breakout. MACD's cruising higher. Imagine EOG is going to be good. Edison, nice flag here. Nice tight pattern. This is a good one. This is a really nice one. I'll watch for breakout of this flag. Look at that. Kirby. Bollinger Bands are really tightening. This is probably one of the nicer ones for the week. Didn't show up on the Bollinger Bands again, only because it came into the Keltner channel in the last day or two. The setting I have is for 3 to 5 days. Stochastics is already starting to lead the way. This will probably be a nice one this week. I would take it to the upside, obviously. showing relative strength similar to other names, and a breakdown back into this pattern as your stop, the lows. The low on, say, Friday. Entergy, another nice high tight flag here. It's only been a week and a half, but it still looks good. A nice move off of these levels and flagging now. MACD. This whole sector looks great. Another flag. Exelon. First Energy. See, these flags are nice. They break out. This one cruised along the 200 period moving average, and now it's breaking out. This will probably cruise higher up to this Kirby level. Probably got a point and a half, 2 points on this one. MACD turning up. Looking good. Higher volume. Note the volume here. Integris. Another one. These all look great. Knee. Nectar Energy. Nice source. We had NS last week. Northeast Utilities. NS. Let me just show you this one. Another one that was on the list week before last on Sunday, and Bollinger Bands expanded and just moved higher. Look at that nice pocket pivot, signaling something was coming. Google pocket pivot if you want to know what that is. Let's go back to nice breakout again. You can see the pattern that's going on here. OKE, this was on the list last week. Pepco, that one hasn't been on the list, but it looks good nonetheless. PCG, PSENG, nice. PNW, Ppl, PEG, nice flag breakout. SCG, SRE was on the list. Nice flag breakout, Southern Company. This was on the list a couple of weeks ago, and again last week. Just continues to move higher. Teco, WEC, and WLL were both on the list last week. XEL. Okay. Another way you can do this is you can find names like EOG and Independent Oil and Gas. Click on the, I don't know if you saw what I did there very quickly. Click right here on Independent Oil and Gas, and then click on Charts, and that'll give you a nice view of all the charts, alphabetical order. Check these out, and if you see a pattern, then overlay it with a Bollinger Band, and you could find some nice trades there. So we're looking at utilities going into the week. This is Cousin Vinny coming to you from theclosingprint.com. Come and check us out. Remember to check out Day Trader Bootcamp as well. GOAT has a $19.99 2-week trial that you can come meet some of the traders in the room. I have lots of resources in here that new traders can check out, strategies, tools, etc. And a lot of tutorials here on the right side. And be sure to check these two out, the box setup and how to use a custom TTM scanner that we just went through. And you can check out the blog where I post a lot of these things every day. Just note capitalization on this. I'll make this a less difficult link in the future, but for now you need to use punctuation the way it's shown here. Alright, but you can also check the link that I'll post in the video itself. And be sure to subscribe because I post these every week, daily, with chart setups and so forth, okay? And daily scan. I only do these videos once a week. Okay, take care, I hope this helps, and we'll talk to you tomorrow.